On January 3, 2009, deep within the wreckage of a global financial collapse, an anonymous figure known only as Satoshi Nakamoto wrote a message into history. The Times 3 Jan 2009 Chancellor on brink of second bailout for banks. It was more than code. It was a declaration. The 2008 financial crisis shattered public trust in banks and governments. It wasn't just about lost savings, it was about broken faith. People realized that those who control the money control the world. Bitcoin promised something radical, a money system without masters, no governments, no central banks, no intermediaries, only math, cryptography, and code. The dream didn't begin with Bitcoin. In the 1990s, the cypherpunks digital rebels envisioned privacy as a human right. Their mantra was clear: privacy is necessary for an open society in the electronic age. Bitcoin's genius was the blockchain, an immutable ledger, open to all, controlled by none. Every transaction recorded publicly, every coin traceable. Ironically, the tool of freedom also became a tool of surveillance. At first, it was a hobby for cryptographers, but when governments printed trillions, when currencies lost meaning, Bitcoin became a movement, a protest disguised as technology. Economists laughed, governments ignored it. And yet, like all revolutions, it grew quietly, beneath the surface. Bitcoin's limited supply, minus 21 million coins, mirrored gold's scarcity, but unlike gold, it could move at the speed of light. This was the birth of digital gold. Bitcoiners weren't investors, they were missionaries. They saw Bitcoin not as profit, but as prophecy, a way to reclaim economic freedom from centralized control. But with time, Bitcoin's story began to change. As money poured in, idealism gave way to speculation. And the question emerged: was Bitcoin liberating the world, or enslaving it to new powers? At first, Bitcoin lived on the edges of the internet, a digital experiment with no borders, no leaders, and no rules. But power always adapts. By 2013, Wall Street had begun to take notice. The same institutions Bitcoin sought to replace started buying it. The first step of integration came through exchanges platforms like MTGOX, Coinbase, and Binance. What was once peer-to-peer suddenly needed intermediaries again. Decentralization had found its middlemen. As trading volume grew, Bitcoin changed identities. It stopped being a currency of the people and became a speculative asset. From revolution to investment, governments that once ignored Bitcoin began to define it. Regulations, taxes, and surveillance programs followed. Freedom, once the point, was being traded for legitimacy. When hedge funds and investment banks entered the scene, Bitcoin entered a new era. Institutional investors didn't want freedom, they wanted profit, control, and predictability. Exchange-traded funds turned Bitcoin into a financial product. Now people could buy Bitcoin without ever owning Bitcoin. It was a paradox. The decentralized asset became centralized in portfolios. Mining was supposed to be decentralized, but as costs rose and difficulty increased, only industrial players could compete. Today, most Bitcoin mining is controlled by a handful of corporations. Then came the energy debate. Critics claimed Bitcoin was destroying the planet using more energy than small nations. But energy was never the real issue. The real question was, who controls the power behind the power? To secure Bitcoin, companies like BlackRock and Fidelity introduced custodial solutions. Users no longer held their private keys, they held digital IOUs. Bitcoin's ownership, once radically personal, was being institutionalized. Bitcoin didn't fail, it evolved. But in evolution came compromise. Freedom was now managed. Transparency became data. And the decentralized dream began to look suspiciously centralized. Bitcoin was built on transparency, every transaction visible on the blockchain. For years, this was celebrated as a revolution in accountability. But transparency has a cost. Privacy disappears. In traditional banking, mistakes can be hidden, debts can be erased, and secrets can stay buried. But Bitcoin's blockchain is eternal. Every coin's history is traceable. A system that remembers everything is a system that can be used to control. Companies like Chainalysis and Elliptic now monitor Bitcoin flows for governments and law enforcement. What began as decentralized freedom is now a map of every transaction ever made, searchable and for sale. At first, states feared Bitcoin, then they learned how to use it. Today, intelligence agencies track criminal and political activity through blockchain data, not wiretaps. In the age of AI and digital identity, your wallet is becoming your passport. If Bitcoin integrates with digital ID systems, the promise of freedom could morph into programmable compliance. Central banks are learning from Bitcoin, not to liberate, but to replicate. CBDCs mimic the blockchain but keep one critical feature: total control. Every transaction can be monitored, reversed, or denied. Many still believe Bitcoin is anonymous. It's not. It's pseudonymous, and with the right tools, pseudonyms link to real identities faster than you think. As blockchain analytics grew, so did the value of data. Corporations now track wallet behaviors, spending patterns, and on-chain activity not for freedom, but for profit. Bitcoin's blockchain is open for all, including those who wish to watch. It's the perfect panopticon. Everyone can see, but no one can hide. In trying to escape surveillance capitalism, we may have built its ultimate form. Bitcoin gave us transparency, but transparency without privacy is just a softer kind of control. For centuries, empires rose and fell on their control of currency. Gold gave way to the dollar gave birth to debt. Now Bitcoin challenges that hierarchy, not through armies or treaties, but through code. The United States built the financial system we all live in, a web of SWIFT networks, dollar reserves, and sanctions. Bitcoin threatens that dominance, but it also strengthens the US tech frontier. The paradox: America both fears and funds the revolution. While the West debated regulation, China executed mind. They dominated hardware production, and then they banned. The goal wasn't destruction, it was redirection from Bitcoin to the digital yuan. The digital yuan is programmable money, every transaction traceable, every wallet manageable. In Beijing's vision, Bitcoin's freedom becomes the blueprint for state power. Europe sees Bitcoin not as a threat, but as a teacher. The EU's digital euro aims for stability, privacy, and innovation, but under regulation so tight that true decentralization cannot exist. When sanctions cut Russia off from global finance, Bitcoin became a lifeline. Energy-rich nations realized whoever controls crypto mining controls a new form of power, energy converted into influence. In countries like Nigeria, Venezuela, and Argentina, inflation eroded trust in national currencies. For millions, Bitcoin isn't ideology, it's survival. The International Monetary Fund warns nations about crypto risks, but behind those warnings lies fear. Fear of losing control over capital flows, over dependency, over leverage. As oil once backed the US dollar, data and energy may back the next digital empire. Bitcoin mining turns electricity into currency, a new version of the petrodollar, this time decentralized. We are entering a monetary multipolar world where Bitcoin, CBDCs, and stablecoins compete for influence. The new superpowers won't be those who print money, but those who program it. Every currency is built on trust, not gold, not government, but belief. Bitcoin is no different. Its power doesn't lie in mining rigs or blockchain nodes, but in the collective faith that 21 million coins will always mean something. We're told that Bitcoin is pure, that math replaces politics, but math can't escape human influence. Miners lobby, developers argue, influencers shape perception. Even in a decentralized system, power concentrates only this time. It's not elected. In religion, prophets deliver divine truth. In crypto, Satoshi Nakamoto became myth, the invisible savior of financial freedom. His disappearance wasn't a mystery, it was marketing. The absence of a leader created belief in leadership. For many, Bitcoin isn't just money, it's identity. Owning Bitcoin means declaring independence from banks, governments, and institutions. But in chasing that identity, we risk forgetting. Freedom without responsibility becomes chaos. Decentralization is a dream, but not always a reality. Most Bitcoin mining is controlled by a few corporations. Most wallets sit on centralized exchanges, and most decisions follow social consensus, not code. Fear drives markets more than logic. Every Bitcoin rally ignites a psychological wildfire: greed, envy, hope. Investors aren't buying technology, they're buying validation. Bitcoin promised equality, yet created new hierarchies. Whales manipulate prices, influencers drive narratives, and retail traders follow dreams sold by algorithms. The revolution has middlemen again. They just wear digital masks. Bitcoin gives the illusion of choice. You hold your keys, your freedom. Yet the volatility, complexity, and digital dependence subtly shape your behavior, a new kind of financial conditioning. Money has always been belief made tangible. From seashells to gold to Bitcoin, value survives only as long as people agree it does. The blockchain doesn't store wealth, it stores collective imagination. Bitcoin reflects us, our desires, fears, and contradictions. We created a technology to free ourselves from control, and built a digital mirror that controls us through faith, not force. For years, Bitcoin stood as a rebellion, but the rebels have been invited into the palace. Today, Wall Street giants, BlackRock, Fidelity, JP Morgan, build Bitcoin, ETFs, custody services, and derivatives. The revolution is being absorbed by the system it once sought to overthrow. With every regulation, Bitcoin gains legitimacy but loses a bit of its soul. Governments that once banned it now tax it, track it, and tame it. The paradox deepens. To survive, Bitcoin must become what it rebelled against, a regulated asset. As Bitcoin grows, central banks prepare their answer: CBDCs, or Central Bank Digital Currencies. Unlike Bitcoin, they promise speed, stability, and total visibility. The message is clear. If freedom money exists, the state must build its digital cage. Machine learning now predicts markets faster than any human. AI-driven trading bots buy and sell Bitcoin billions of times a day in this new ecosystem. Bitcoin isn't a rebellion, it's raw data feeding algorithms. Freedom fades when machines become the market. The blockchain is built on cryptographic certainty, yet quantum computing whispers uncertainty. If quantum machines crack the math protecting Bitcoin's keys, every wallet, every fortune could vanish in an instant. The digital vault of the future is only as strong as the physics that guard it. What began as a peer-to-peer revolution now runs on corporate infrastructure, cloud storage, exchange servers, and mining monopolies. The code may be open, but the access is owned. Bitcoin's greatest challenge may not be censorship, but dependence. As energy debates rage, Bitcoin faces moral scrutiny. Each transaction consumes enough power to run a small nation. But miners argue, energy isn't the problem, it's the price of freedom. In the end, Bitcoin's sustainability will depend not just on energy, but ethics. Bitcoin is no longer about technology, it's about trust. Trust in math, in code, in ourselves. As nations digitize currency and corporations tokenize everything, Bitcoin remains the question. Who do we trust more, the algorithm or the authority? Bitcoin has become a geopolitical weapon. Nations like Russia, China, and the US now use crypto strategy as part of economic warfare, sanctions, evasion, influence. The digital age hasn't ended financial empires, it has armed them with code. Bitcoin began as an idea, freedom through code. But the deeper we go, the more it reflects us, our greed, ambition, and need for control. The paradox remains eternal. The moment Bitcoin wins is the moment it stops being Bitcoin. Every age creates its own money, and every money, its own myth. Gold forged empires. The dollar built globalization. Bitcoin birthed digital faith. Perhaps the future isn't about replacing systems, but recognizing that freedom itself must evolve one block at a time.